vote.
We'll call to order the Monday, August 22nd, 2022 meeting of the Ogdensburg Bridge and Port Authority Finance Committee. And our business today is to review the statements as of July 31st. And that is, sometimes happens, I have a question or two, but in the course of your review, and I would ask you to walk us through these. I'm curious about the change in the M&T deposit funds. And I wonder whether you could just run over the OMLC wind turbine project, how that payable changed. And I note, Steve, the actual wind turbine revenue is so much higher than budget. And I wondered if you just talk about budgeting, the difficulties and the pleasures.
I think one of those is, you want me to wait till we get there, or do you want me to?
Oh, you could, let's talk about
Okay.
that.
I think, if I recall, my thinking was, we'd only have one big project.
Yeah.
That was the Vestas project.
Sure.
And GE was on the horizon, but at budget time, actually, budget time is just a little bit ahead of when, if you recall, when we went to Salt Lake City,
Yes.
budget was kind of pretty well done, but we kind of, knowing we were going there and having a meeting, we kind of thought that definitely was doable. So rather than put a placeholder in for GE, we just left it blank and thought, you know, if we get it, we get it.
Yeah.
So that would explain my thinking anyway with budget.
Well, I think that really reflects the nature of projections, which budgets generally are.
Yeah, and
You pick some premise.
And it's the flip of the previous year where we generally just put a basic number in there, you know, and nothing came through. And a lot of that was, if you recall, I think a lot was on federal legislation with solar tax credits and renewable energy tax credits. So I think what that did, a lot of it we anticipated was going to be jammed up to 24, everybody trying to get in the window. Instead, that was pushed out.
Yeah.
So that people rearranged their schedules. It wasn't so combined. So we thought, well, definitely we're gonna, and so it's kind of the flip. Last year was the flip of what's happening this year.
Yeah. That sounds great to me. And Patty, if you would.
We'll start with the statement of financial position. You'll notice that our cash reserves are again still quite high. A majority of that is the refund for the harbor deepening. We do have to talk to Tompkins and possibly Watertown. I think there's a better way to hold on to this money than just leaving it in the savings account that it's in. Mind you, I'll take the interest we're getting every month, which is lovely, but I think we should probably have it in a better deposit instrument instead of just the bank account. And while we're doing that, the difference on the M&T deposit bond payment reserve fund is the bond principal and interest is deducted in July. So they take this year's principal payment was 105 plus an interest payment. However, I don't remember exactly how much the interest was. And then all those $38,000 that we put away every month sits in M&T, and then they have the cash to sweep the principal, the interest payment, which is in January and July, and the principal payment, which happens in July. So we went from 300 and something to 84.
So if I understand this correctly, and I'm a little struggling to grapple with the reserve funds and how they work. The OBPA deposits money in the account every month during the year preceding the payment, and then the payment is withdrawn.
Yes,
And
In 2 times.
those are the terms of the
the bond, yes.
bond.
And, yeah, we can't put off a monthly payment, or we're in default after 21 days,
Even though they have
even though they've got a ton of our money.
$500,000 of our money, we're still in default.
Mhm.
So yes, we have to pay the 38,000 every month.
Yep.
And then in January, they sweep interest only, and in July, they come back and sweep interest, more interest and principal.
Yep.
Right now, we're still doing well on the principal portion. It's about 105 to 110.
Mhm.
But that's now going to start going up by $10,000 a year. I believe it's the next 5 or 6 years, and then we're going to start to see it double.
Mhm.
So we'll be looking at over $200,000 in principal in July, which means that payment to M&T every month will have to go up.
Mhm.
And this is for what?
This is the airport bond. It's a $9 million bond.
Do we have any
2043.
of our long-term debt that where we're approaching having it paid?
We do have the term loan at Tompkins Trust is up in April of 2023. I'm going to try and pay one extra payment in this fiscal year so that it's done. But instead of taking that money back out, we're used to sending Tompkins 75,000 a month.
Mhm.
So instead of taking that and making it only 58, or whatever that number is, we're going to leave it there and let that money go toward the line of credit or the mortgage,
Mhm.
because it'll be an additional $12,000 a month that we can put toward something else at Tompkins and help bring some of those payments
Mhm.
closer to. The mortgage will not be paid off until,
2043.
no, the bond is 43, the mortgage is 28 maybe, or better.
Mhm.
It could be out a little further than that.
2028.
Yeah, or 38.
And there's restrictions on the bond on, like if you think of it as paying, we
Think of
can't,
it as.
we can't pay it off early. There's a restriction as to when.
How
When you're,
unusual.
yeah. No, you're thinking, oh, let's just get this out of the way, or let's get ahead and all that. There's a restriction and it's out there, right? It's not anytime soon.
No, it's out there, but you would have to pay, because they're assuming all the interest they will get on the bond. So it's not like paying off a mortgage early where you pay less interest on it. You'll have to pay the principal plus a maturity. There is a clause that will allow us to pay it early if we have an additional $5 or $6 million.
Well, it's hard for me to understand that, really appreciate the bank's point of view on that, because it always seems as if they are able to loan their money
Mhm.
and wouldn't begrudge having somebody prepay. But, it always looks different from the other side. I actually did talk to a banker recently who said, we have much more money than we're able to loan out. We would be pleased if someone would take a large amount out of facility. I was talking to a small bank that doesn't,
Name.
Address, phone number. Hmm.
Anyway, I thought that was interesting. And after the meeting, I'll mention it.
So that,
I'm wondering, now that you brought it up, those bonds that we do have out there, if we could have at our next meeting, what we owe when they mature, and however we pay them monthly, quarterly, yearly, and what for. I think I know pretty much what for.
Yeah, we can dig up, we've
oh,
asked
that's,
that question in the last 2 years a number of times about everything, so we could summarize that in form that,
Well, the fact that it's going to increase, you know what I mean, down the line, I think, you know, something like that would be nice if we know about it now.
That's right. Yeah.
And maybe that's the only one that's like that. I don't
That's
know how they're structured.
The
but-
mortgages and the term loans are your standard
Right.
loan mortgage, but the bond is the only one that we see the drastic increase in a few years.
But a lot of mortgages are written so that the payment stays equal even, but the allocation of interest and principal shifts.
Shifts.
And so we need to budget for the principal or plan for the cash flow on the principal as well as the interest.
The interest, yes.
But that would show up in a projection of long-term debt.
Yes, it does.
Yeah. Well, enough on that question, and thank you.
If we go down to our accounts receivable, we are getting 93.76% of our regular accounts receivable is either current or 1 to 30 days. The wind turbine, as of July 31st, the big project owed us 1.3 of that 1.7. Then we do have split off in there, even though that's the GE project, but it's all wind turbine related. And then we go down to our fixed assets. They're basically steady right now. Our other assets, which is all the OPEB and pension deferrals. Then we have construction in progress. I would like to have the harbor deepening projects that listed on the second page expensed out due to the fact that the project is not moving forward. We cannot make that a fixed asset. We will have to expense that, which means at year end, we will have a large expense for the bills that have been paid so far on the harbor deepening project.
Are we in for all that 1.1
We've paid that.
already? Okay.
And so that will simply be expensed out instead of turned into a fixed asset.
So it'll show, it'll affect
The P and L,
the revenue, bottom line revenue,
yes. We'll do that.
but not the bank account.
Right, right. So the P and L, you'll see it as a huge expense for year end, but not, but it won't affect any cash. And then the next is just the drainage and terminal area, so there will be a large difference between the Malls F and then the next one down once we expense out harbor deepening.
Aren't the bottom two part of the yearly $1 million grant?
No,
No?
no. The drainage terminal, we just got the grant amount. That's what, I don't know if you've mentioned to them. We'll need to meet on, to accept that grant by September 8th. We've got to have a quorum of the board to accept. It's close to that, it's 424 or 417. That's a separate project. That, to answer, I'm not quite sure on that.
Yeah, I thought we were doing drainage through the.
Yes, you're right, you're right.
The $1
You're right on
million.
that one. Yes. And the airport terminal project,
that's a design phase, I believe, right now. It's been on the books for a number of years. So we should probably look at those and see where they need to go, whether they're
yeah,
still
that would
open.
be. Yeah, I think they're all, well, the drainage one is separate, but the terminal project, I'll have to take a look at that and see where the funding.
I believe their numbers are low, so
Yeah.
they're prior to 21 and 20.
Well, I'm just wondering, if that's design, it may be part of the upper one. You follow me? That's construction, airport EA, PH drainage terminal area, that's construction. The terminal project might be all the engineering.
Could be.
Okay.
216 is just for engineering on the
Yeah,
drainage.
yeah, between, there was more to that than, it had to do with wrapping up all of those catchment areas and all of that
Mhm.
and bringing that all together. I think that's been an ongoing project, like Patty said, I think for over 2.5, 3 years. Then we finally got to construction. Oh, yeah, anyway, yeah, construction, that makes sense. Now the construction is gonna be over 2 million to do that. And that right there,
To do the drainage.
all of those are engineering ones. The actual construction was awarded to Barrett, and that project is 2.3, the result of all of that. I've got to look at the terminology on who calls what there, because I'm confused as, I'll know the numbers, but the titles right there are really,
Okay,
I'm not sure on that, Sam. I'll get you an answer on that.
thanks.
And we go down to our accounts payable. Our retirement is static. We do have a plan to pay it off within the next month and a half. Our regular accounts payable, of that, close to $1 million belongs to Auburn Crane and OMLC for the wind turbine project. E-Transit, we have a plan to pay them actually half of what we owe them by the end of October, and the other two have been paid in full.
Good.
Are there any questions on the statement of financial position? I think we've dissected as we go on.
It's been helpful. I appreciate it.
No problem. And then if we look at the budget to actual, you'll notice that we're up on our bridge revenue. Our total income started out slowly at 101 in April, but in May we went to 155, June went to 172, and this month we're at 173. So we're really starting to creep up and be where we need to be to hit our 60% for the budget. Our airport revenue, a big item there that we didn't expect was our parking. We had only assumed in the first 4 months that we would have about $13,000 in income, and currently we are at 21 without July. July statements had not come from MAPCO before we had to get this done, so there should be probably another 8,000 on that 21. Our fuel sales are still strong. They have slowed a little bit, but they're still stronger than we anticipated. Our industrial park revenue is down a little bit. I think we over budgeted on a couple of areas, but we do have some transitions in progress. So I think we'll see that start to even out again. Our regular port revenue has been just set aside a little bit because we're working fast and furious on the wind turbine. But we do have 2 salt ships due in, so we should see that pick up quickly. And the wind turbine, it's a timing issue. We invoiced more than we had anticipated so far. All of our expenses, we're keeping a handle on all of our expenses, which I sometimes don't think we are, but we are, which is good to see. We just hired our director of operations, but we hadn't hired that or our general mechanic. So the salary expenses have been down, therefore our employee benefits have been down.
Was the operations manager included in the budget for the full year?
Yes.
Was it the full year?
I believe we had in one for the full year. We were anticipating some of it being underwritten. But I think we put him in for the whole year.
Right.
I would have to look.
I gave a sigh of relief.
Yeah.
It seemed like there was discussion about that for the whole year.
Mhm.
And when you say underwritten, I think we anticipate, we try to get them in here soon enough to that some of the port projects
Yeah.
would pay for that. So I think that's what our thinking was on that.
But we try to put in the whole amount in the expense, even if we're going to get revenue for it.
Mhm.
That way, if we don't get the
Makes sense.
revenue, we can still,
Makes sense.
we know the budget can still handle it.
Can some of his salary be offset by charges at the port? There's still enough time for that?
Not as much opportunity as there was. Adam puts in for my time. So he and I, well, he doesn't because he's on a monthly, but for my time, it's not every hour I put down there, but the idea is it softens my salary somewhat. When I was just a director of operations, some of that, I'm real busy, would get close to, I think we'd get close to 20% of my salary would come out of that project. It is my time.
Right.
And we do take our portion out of our half that we share.
Well, like Dave said, we had talked about that, the portion of that salary being offset by revenue we would get in by operations at the port.
Right, and that, we're trying to focus on some of those things that we can pull out, an offset to salary rather than just say, this takes care of everything. If we can put that into some of our fees and costs there to get back some of that, especially in this environment with the cost of everything going up.
Too bad we can't do that with that developer we have.
He can hear you. That's what we're counting on.
All of our utility expenses are coming out over budget. And the reason behind that is I budgeted net, not gross, making the assumption that some of the monies would come back to us as we bill our tenants. So that's my mistake. We will see that throughout the year.
Sure.
The airport, we didn't hire the fourth person at the airport until June, so that has saved a bit on our airport salary. Their maintenance expenses are pretty close to being where they need to be. Our fuel sales, of course, are, we paid much more, and the revenue has yet not covered the fuel sales. We are still approximately $38,000 behind in getting to that point where the fuel sales will cover it. In August, we sent out our first bill to Contour, who is taking fuel, that had not anticipated taking fuel, so we'll probably see a swing next month.
Good.
The industrial park, the only reason that salary is over budget is we're charging more of the economic director's salary to the industrial park than we did mine. And the marine terminal, we budgeted, the reason the salary is low is we budgeted a full year for 2 employees who have retired. And we have yet to look at those 2 positions. Our maintenance expenses are up, but almost all of the overage is reimbursable. The tarp that cost $6,000 has been reimbursed by the company for whom we purchased the tarp. The fuel deliveries that are in maintenance expense, a lot of that is going out to the wind turbine project.
Yeah, and I can't break out anticipated expenses to projects. You can throw a number there, but a lot of times, I don't know how much, like covering for tarps, that or it's all covered in the actual project for revenue, but as far as for budget wise, to throw numbers out there for compressed air or tools or like that. So it always is wonky because, but to Patty's point, that's why that number is so much higher in expenses, but it's covered up really under wind turbine in revenue that we get back.
The legal expense of the port, we don't usually budget for it, but this year we've had the port security grant and some input on the harbor deepening.
Mhm.
And then the wind turbine expenses, I restructured the budget numbers. We originally had the project going out till November. So in the restructure of that, it's now just a timing issue. Everything should even out by the time the project is done.
Right.
Are there any questions on the budget to actual?
You mentioned salt storage and tarps, and that raises a question that came before me when I was talking with a citizen that doesn't relate directly to the financial statement. But a friend of mine who goes fishing, Ned Hackett, asserted, and I don't know if you know that, do you? Yeah, asserted that the salt pile on the end of the pier had been there for several years without being tapped.
No, it was tarped, but it had wind damage that we've, I believe, maybe 4 months ago, so it's partially covered.
Sure.
But we needed more salt to fill in the backside of it.
Yeah.
And then we've got to reshape it and get it covered.
Yeah.
But it's been out there longer than it needs to be, but it's not the same. It's been covered as long as it's been there up until, I want to say maybe May. We had a windstorm and actually the tarp blew out from under the bags. I've never seen that. And then it ripped, it came down on one side.
Yeah. And does that create an environmental hazard?
Oh, sure. I mean, ultimately the salt goes on the roads, gets dissolved, goes in the storm drain and goes, but in a concentration like that. But we do have it, it's in a bowl type of thing. And we do have the drainage picture, all collections all covered, but you can't stop everything there. But
That's right.
we do, and a lot of those, they're all curved. The drainage doesn't go off the thing. It's kind of, some of those flat areas go to the middle. And so anything that sheets off it is clean water when it's covered. And then, when you're working around it, it keeps anything that, with rainwater and everything, it's kind of a collection thing. But, yeah, with that concentration, you don't want to leave it uncovered too long.
Mhm. I think that's fine.
No, if it needs to be moved at all, is that expense on us?
No. And that's, we control how our space is used. So if some of that, you could get salt ship upon salt ship, but we've got to keep the space open. So they're on the hook for us moving some when we have to. We try to minimize that. In other words, we don't want to move it any more than they have to.
Right.
But, and that's one of the driving forces behind the port expansion is to pick up much more room. It would, that extra room would almost eliminate the need to take it to the inner harbor salt pile. But right now we're relocating the last ship out there just to get it out of the way because we're going to need, we can't store beyond that now that the wind turbine blades are there, but they'll be out of here by the first or second week of September. Then any vessel comes in there, we can load the backside of that with a self unloader.
Okay.
Is there anything else that we need to consider as part of the finance committee meeting? You peaceful, Sam?
Yep.
Folks, you don't have anything else to bring to us? In that case, how about a motion to adjourn?
So moved.
All in favor?
Aye.
Meeting adjourned. Thank you.